Good morning, all. This is Raghu here. I thought we will go ahead and analyze how Nifty performed and what was the view I had shared yesterday. So yesterday we had shared that we have a moderately bearish CPR central pivot range, giving it a wide CPR as well. And also we did say that market will be in a range bound way. And as we see, yes, market went down, but there were a lot of ups and down and due to the option volatility, so there was not a possibility where one would enter and keep it till the end of the day. So the option premium was eroding pretty fast because of tomorrow's expiry. So it was a kind of a tricky situation, but definitely if you follow price action, this could have been identified. And let's see how the market fared. So yesterday I had informed that kindly bear with me. Okay, let's go ahead. Let's go ahead. 15 minutes. All right, where do you see the 200 MA on 15 minutes? If you watch my video yesterday, I had informed that price might come till the 200 MA on 15 minutes time frame, because people who follow moving average for trading, this 200 MA on 15 minutes is the weekly CPR. So there was all possibility that price might come closer to 18,240, 250 or 200 MA. It came and you saw there was an evening star and market bounced. Yes, while coming here, I did mention that price might face support near the Virgin CPR. Now, what happened here, guys? So market opens from the center, almost closer to the central pivot range, and it cracks down. Where does it go? Whom does the lower CPR belongs to? The lower CPR always belongs to sellers. So what kind of trend we are in since yesterday? We are in a downtrend, 5 minutes or 15 minutes below CPR. Okay, so we have a red candle closing below the lower CPR. So this was a high probability trade where one could have gone short. However, we had kind of double bottom and the previous day low here. So probably some people will wait for this low to be broken, because the previous day low always acts as support while falling down. So did I take a trade here? Yes, I did take a trade here. Please see, I preach what I say. This was my trade. Okay, there was little 920 sharp. Do you see? After 5 minutes, I did take my trade at 9:20 sharp here. What is the time? 9:20 a.m. So, but where did I exit? As a pivot practitioner and a working professional, I exited here for 4K profit. And I had another 20 points from here to here. That is how the option works. Probably I should have exited 50% of my quantity and then carried another 50% of quantity to make the maximum money, or retain the profit in case if the price would have reversed here. So those are all different money management and trade management strategies. But coming back to the pivots, yes, this belongs to sellers. Since we are in a trend, I did take a trade and made my money. And here, what happens here? You see, this is kind of, if you see, let's see what is here. This candle closes at 18,329.35. This one opens at 18,332.4. Okay. So this is an inside bar. What do you mean by inside bar? Inside bars are nothing but a pause in the ongoing price movement. Market had a sharp fall, but all of a sudden you see an inside bar with a green candle, right, with a buying pressure. So this was a good candidate to go up. Did I make money? Yes, I did make. I just made around 2,400 rupees. Here, probably I should have gone long to make maximum benefit, but since it was a counter trade, I wanted it to be fast rather than waiting. Counter trades should always need to be fast, like a scalping. Now the next scenario, what is this arrow mark indicating? This arrow mark is indicating that price came back strongly, and as per my trading strategies, where are the selling zones? Central pivot range, we have one selling zone. Okay, this is another selling zone from the opening candle, and this is one more selling zone. You have a double top here. So even in pivots, you can mark the selling or the buying zones to identify the support and resistance. People call it support resistance, supply demand selling, but with different methodologies. But if you want me to keep it very simple, okay, where do you see the selling zone from this morning? Okay, this morning we had a very strong red candle, and the open of the candle or the high of today or any particular day will always be a resistance. Likewise, the low of the day will always be a support. Okay, this is common sense, which any trader should be aware of before starting the trade. Now, this was a resistance zone. We knew it. Now here, what happens? We get this and you have a red bar. Now, can you take a trade here? Oh, definitely yes, because I'm a pivot practitioner. I'm telling the lower CPR or the bottom circuit always belongs to sellers. So we are in a downtrend. In a downtrend, we have a red candle breaking the lower CPR, go short, keeping the stop loss above the high. As simple as it is. But when you compare the price action and watch this candle, see where did this green candle close? This green candle closed at 18,453.75. Okay. And where did this red candle open? 18,454.2. Where did this close? 453.75. And this one open at 454. Got it. This is 54. $456. This is where it opens. This is 454. This is where it closes. Now, what I'm trying to tell is there is a 1.5 point gap up. After this candle closes, it comes down. It's not a ideal 50% body, but nevertheless, the entire candle is closer to 50%. You can consider maybe this is a 50% of the green body. What pattern is this, guys? If you understand the candlestick pattern or the price action patterns, let's call it as a price action. This is a dark cloud because it had a gap up after the green candle, then came down, almost covering 50% of the previous candle. So it's a dark cloud. What does a dark cloud means? A dark cloud pattern should always be formed at the top near the resistance where it carries a weightage. If you find this pattern in between, it does not carry any sense. So you need to have a trend line, pivot, a Fibonacci, or a normal support and resistance, buying, selling resistance, where you can take this trade confidently. Now, where is this evidence? This is the evidence, right? We have first evidence of this, and in this evidence is nothing but this is an established selling area. And in this selling area, we are having a dark cloud where sellers are telling market will go down. And the next candle breaks the lower CPR. And if you are a pivot follower, you know lower CPR always belongs to sellers. So you had a trade here. Yes, the trade was not smooth. You come, you make your points, but this green candle would have taken all your profit. But that's how the market works. It does not go in a straight line. But where's your stop loss? Your stop loss is above the high. So if you have picked up the trend, you should just wait patiently. Suppose you are a scalper, you enter here, you made your 1:2 or 1:1.5 profit here, exited. Where would be the next opportunity? The next opportunity of trading would be here. This is a trend line. So when we first draw the trend line from the top, okay, the trend line would look like this, right? Now the trend line is broken here, but what you need to do is you need to keep on shifting your trend lines. Yes, you have to shift the trend lines to identify whether market is respecting that or not. Now here closer to trend line, we have a kind of, this is a body, we can consider this as a Morobuzo candle. You don't have, after taking trade, probably you might exit near the previous day low, because previous day low is here, which would act as a support. You have one more small inside bar here where price pulled back, but you have to stay with the trend. So somewhere here you have a Morobuzo candle. So you know that near the trend line, lower, lower high, lower high, lower high. So you have a lower low, lower low. So you have lower high, lower highs, two lower highs, two lower lows, indicating that yes, market is in a downtrend. Need not tell. You can, I mean, just I was giving you a tips of another way of identifying lower highs and lower lows to see whether market is in downtrend. Second evidence, Morobuzo candle, sorry, engulfing candle. Yes, go short here. Where would be your stop loss? Your stop loss would be here. Guys, why I keep telling about stop loss is without stop loss, you won't be able to trade. Since market does not go in a straight line. See here, you entered here after the dark cloud pattern in the selling area. So you would have made big money, but whatever money you made here, it would have been taken over by this one single green candle because of option Greeks premium eradication. Tomorrow is expiry. So that is the reason the risk should be taken with the stop loss. You cannot chase the price, especially when market is volatile. So your stop loss will be above this candle. And you can also see, if you observe this, it will give you a very clear indication. Okay, this is a kind of double top, one top, two tops. Market is full of patterns. You need not wait for an ideal pattern to show you. This is a double top. Now understand, okay, we have a downward channel. Near the downward channel, this actually is a, we call it falling wedge. Falling wedge is a reversal pattern. I'll come to that in a while. But in this falling wedge channel, near the channel is your best opportunity, because you don't see any pivots, you don't see any other support or resistance closer to this. But if you follow my method, okay, you have one red, one doji. After this doji, market decided to take the price down. I have explained it. After a doji, why we have to wait for a candle to show the direction is because doji is the highest form of indecision between buyers and sellers. So after a doji, whatever candle is formed, if a green candle is formed, that means buyers have made the decision to take the price up. If a red candle is formed, sellers have made a decision to take the price up. This is how you need to understand the price action. Price action is not where price is, but rather who is making the decision. And if you keep it simple, you can quickly understand and read which direction market is going. All right. So this is another resistance. Within the pivots, you know that this is a decision point where sellers have made a decision to take the price down. Probably if it comes, if you're courageous, you can just go short here. But I wouldn't say go short because we're trading in option. Wait for a price action signal. So unfortunately, we had a big Morobuzo candle. And after the closure, okay, the next candle closed below previous day high, which is nothing but this would have a support, right? It's a bottom. You have one bottom here, you have another bottom here. Consider this also as a double bottom. So this would act as a support. So we have to wait for a candle to break this support. So this looks reasonably broken. And in this pullback, you could have taken a short. All right. You take a short, go make money. Okay. Now, my, what are we seeing here? What is this? What did I tell you? Virgin CPR, a CPR where no candles have touched it or tested it. Now this Virgin CPR is 2 days ago, and in my yesterday's video I had informed that Virgin CPR acts like a magnet, where similar to support and resistance, where the buyers and sellers come down to test it to see whether it can act as a support or not. So here what do you see? First, Virgin CPR S1 support. S1 is a buying area, by the way. Buying means S1 is a buying area in an uptrend. That's the reason you see buying area where market went up. Now near the Virgin CPR, you saw a lot of price action. We had one bottom, we had double bottom, prices moves up. For a second, I thought that price might break because Virgin CPR, I told you, it acts as a support, double bottom and double bottom. This is double top. This double top is broken here. So I thought that market might pull back to this resistance area. However, later I identified, and my apologies to some of my followers. So I was busy in the middle of a meeting and I did not recognize. I recognized this falling wedge almost at mid noon. So once I recognized this falling wedge, I saw this reversal pin bar. This was again a gap up, similar to a dark cloud, but it's not a clear dark cloud as this is not covering the 50% body. But what we need is these yellow lines are weekly low and this is previous day high. But we have a trend line where since morning or since yesterday, this trend line seems to be respecting. So here we have a sharp pin bar, and pin bar, if you have followed my 2 hour long pivot explanation, you will see the price action candles. There are only 4 or 5 price action candles which you need to read the market, and this is applicable to all the market. So this reversal pin bar was your sign to go short, but we have a S1 pivot. Can we take short immediately? Because it broke, we have a double bottom and then this was broken high. Some people looking at the trend, they can take short here because what we need is downward channel, this trend line. You take short, high of this candle will be a stop loss. But some people will wait. Okay, S1 is a buying zone. Let's again wait. And this is double top was broken. Let's wait for S1 to be broken. Okay, S1 is broken. So they enter here, keeping stop loss above the previous candle high or above the spin bar, depending upon their risk appetite. See what happened here. From here, market just went down to S2 pivot. This is my post market analysis, how much money I made today, right? 6,602 is my money. I'm happy with that. I know there are a lot of traders who make quite a lot of money, 50,000, 60,000 or a lakh. But did we had close to 50,000 with a 50 or 60K capital today? Honestly, we had so much of money today. It's just that I'm a full-time working employee and I'm not able to trade properly the way I want to. So my method is scalping. However, there was 15,000 with 500 quantity here from one shot. And again, from here till here, there was more than 50,000 with the options what I have shown here, 18,400. See, if you want, you can check here chart. I'm sorry, we don't want C. Beg your pardon. By the way, you can ignore all this. Okay, 9:15, 9:30, 18th October. This is 20th October, right? 20th October, 10:15. Okay, this is the one. 9:15 market comes. Okay, if you calculate from here, 93, high was 216. So your 500 quantity would have become 50,000 if you had traded properly. How to trade properly? By following pivots, by following the price action methods and picking the signs from the market. Can everyone go ahead and take the maximum points in option trading? No, maximum points, it's nearly impossible. But if someone like me, if I want to take a trade, I would always go for 1:2. Okay, I want to go short today. Okay, where would I go short? Okay, I will go short here. My stop loss is right above the top high, and you can keep target as S1, which will be 1:2 ratio. So 1:2, 1:1.5 is fair enough. I had exited here. This is not a good risk to reward ratio, but I thought that these two will act as a support and exited. So probably if I'm a full-time trader or when I learn proper trading, I would go for big money. Unfortunately, I won't be able to trade properly because of my work. By 10 a.m. I need to attend a stand-up meeting and then follow up with a lot of other daily engagements. But this is how you would trade. If you're entering after the 5 minutes, it should be 1:2 ratio. We have a virgin CPR, we have a S1 support. So this looks ideal target. In the next subsequent targets, you can keep a similar targets. When S1 is broken, also you can go for 1:2. But if you are a full-time trader where you know the price action and you want to take the risk, definitely once you've identified this falling wedge, you would be able to take the trade. Now, what exactly is this falling wedge? Now, before I go there, the virgin CPR is tested. This will be invalid. Now, for tomorrow, we still have two more virgin CPR. So you need to understand the virgin CPR test will happen within next few days, 1 week to 10 days max. Within a week, it should be tested. The more gap you have, the more insignificant this become. If tomorrow, again, if market gaps down, probably it can come here, take support. Now let's see how tomorrow would fare. So this is, I'll remove everything. I don't want moving averages. And let's go for developing CPR. Okay, this is our tomorrow CPR. And now we have a clear descending CPR. Okay, we have a downtrend. We feel that market is in downtrend. So when you see this, this is where I want you to understand. This is a downtrend line. This swing low is this. Because this is a kind of falling wedge. Okay, we don't know how far it's going to fall. This is a falling wedge. Falling wedge in an uptrend should be considered as a reversal. Now, how do you identify this can be a reversal? If you observe the RSI, do you see any RSI divergence, positive divergence? Okay, it is along with the trend. So we don't have any positive divergence. So we'll assume that the market might still go down. If we had a positive divergence, something like this, for a second, I thought today itself, it will reverse. See here, this is one low, this is one low. Do you see? Watch this line. One low, one low. First low, second low, third low, fourth low. But when you see here from first low, market is somewhat going up, at least till half of the day. This is positive divergence. So if you don't understand, you can Google, you will identify what are positive divergence. So we don't have any positive divergence and we have a wider CPR for tomorrow. Tomorrow is an expiry. So again, I'm going to tell you how should you trade this? See, these are tomorrow CPR. We have R1 at 18,413, S1 at 18,164. So we have a very wide range for today as well. So suppose, as I said, if the price opens between this range, how would you trade? I would like to trade by identifying these selling areas. These are the key important selling areas. So even if the market opens above R1 pivot, you can consider market is in breakout after breaking the high of yesterday. If market opens in this selling area tomorrow, expiry, you should go short. The stop loss should be above this pin bar. So if market opens here, this is your buying area because market showed it has been bought here. So market might take support and bounce up. But if you want a trendy move, market should sustain below S1 pivot or market should sustain above R1 pivot. Now, since market has fallen, where can it take support? Let's remove everything. Okay, let's remove everything. Let's go back to our 1 hour time frame. In this 1 hour time frame, remove this as well. One gap is already filled. This gap is almost filled. So any gap will act as a support, right? So 18,199 is a support. After 18,199 is broken, where can market go? So let me tell you, give you the realistic levels. Most of us are intraday traders. We have one gap here. If 18,200 is broken, it should go to 18,050. 18,050, here I see one more price action bar, 18,100, 18,050. So this is a stronger support. If it breaks 18,050, gap will happen till 18,009. You can consider 18,000. These are the three important levels which you should be watching if market goes down. If market is going up, as said, this is a selling area. 18,365 will act as a resistance. On top of that, we have one more, 18,461 will act as resistance, and then all-time high, 18,605 and 18,590. This would act as resistance. So these are the key levels for tomorrow. Since I'm an intraday trader and quote unquote, I'm not a SEBI registered analyst, but a full-time worker who is trading just for hobby. And I would like to distribute my pivot knowledge so that new traders can utilize it. Please do support me, share and like, or provide any kind of feedback. If I need to improve on anything, please do feel free to provide me the feedbacks and comments. I will be taking it in a positive try and I'm going to improve it. Thank you so much.